Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, September 30th, 2020 at 6:30 p.m. Central Time. Well, as I told you last night, there were going to be a lot of people watching the debate, and boy, what a fiasco that was. Debate, I'm not sure that they debated anything. I think there was mudslinging. I think that Chris Wallace completely lost control of the event. There's going to be new rules according to the debating committee now, and they'll be stricter. And the next format will look a lot different, but did they really get anything? I don't know that anyone won anything on that debate, period. First of all, I don't know what they debated. I saw that they threw plenty of mud at each other. All right, away from that, the big event isn't that the information coming out in the morning that we're getting the economic data is good. It's been real good. Here's what you've got to be watching. Tonight we have a situation where instead of the Democrats in the House voting on their COVID relief bill, they've held off for a day. And that's because it appears that the gap is closing between what Ms. Pelosi, who's running the negotiations for the Democrats, and Mr. Mnuchin, our Treasury Secretary, is wrapping up things, if you will, for the White House side and the Republicans in the Senate. So we're going to find out where this all goes. The three issues, as I understand them: the size of the bill. The Trump administration's offered $1.3 billion. Democrats want $2.2 trillion. Did I say billion? They're trillion on both sides. I want to be certain I say that. Then we've got the difference that out of that amount of money, the Democrats want to give a certain amount to states and municipalities. The Republicans have fought that. And the Republicans want to give businesses protection where they can't be sued for employees coming back and working and catching COVID. The Democrats don't want to give that. If those three divides can be compromised on, we could wake up with a bill. That makes the danger of the market. How much of it's built in already? There's a certain amount in there because the market knew this was going on all day. If you discount it again, how high do you go? The metals backed off on that news because typically the stock market goes up. You can fall back a bit here. The dollar was down today as Treasuries gained, and you can see that they still are, as that means, hey, the economy's getting better. Maybe the Fed doesn't have to have the pedal to the metal as much. If we can get into a situation, we get the relief bill, we buy time to the end of the year and longer, however that's going to last, and maybe we get a vaccine or a treatment that's really good. Just giving you all the what ifs. I'm done talking about it. So now we take a look at what the chart action is. As you can see, this market is looking right here at this last rally high. That's the important number to me on a closing basis. And that was up at 33.53.60. If the market can get and stay over that, you're over it right now, what happens is you lose that pattern of lower highs, lower lows. You go into a neutral pattern right there. When we take a look at a daily bar chart with absolutely no studies on it, the pattern is one with today's action. You have an outside day up. Remember, we're already in the evening action now of higher lows and higher highs on the swing line. What you don't want to take out is 32.91 and a quarter. That would be very bearish on the market initially, in my opinion. Where's the resistance in the whole play? It's taking place now, right here at that 18-day average. Gee, I'm so surprised. How often do you hear me say that? That's where I think the battleground sits right now. Let's assume that the market gets what it wants in terms of we get a deal. We get a new package. People get their checks. We're going into the election on a good note with all that. Well, maybe the 34.20 is going to be the resistance area. Let's assume the market doesn't get this and nothing gets done. It falls apart. If you take out 32.91, then I'm looking at the 32.35 to 32.07 area as the next support zone, but you take out the air out of the market again. What about momentum? Momentum is pointing up, and it is still not an overbought condition. If you get up to that Bollinger Band, you will be overbought. So giving you the scenarios, and that's all I can tell you as to where we're at in my opinion. In the NASDAQ, it's the same darn thing. You've had the NASDAQ, though, in an uptrend. You've had your higher lows and higher highs. The upper Bollinger Band, 11,561 is the target. You're already overbought. If you take out today's low because it's an outside day up, then my target becomes a retest of 10,792 is very much in the cards. When we come to the Dow, another outside day up today. Therefore, higher lows, higher highs. Now, the outside days up on these three markets had a lot to do with window dressing, end of a month, end of a quarter, a lot going on. Told you it was going to be volatile. And then you throw in the package. I don't think the debate, honestly, is part of this right now. I think it's moved on already away from that. Target here, 28,222. Take out the lows of Wednesday. I think you're going back to the 26,694 area. In the Russell, the market is without trends. You have a lower low, higher high, battleground. Can I make it any clearer? That 18-day average of closes. That's why taking my charting course teaches you so much of this. I made a statement to you. I think the big money pros are buying long, longer term out there, holding at the 200 and the 100-day average. Why? You hit those numbers. You haven't had that opportunity in a long time to come in at numbers like that. Let me stand back here. Last time you had a 200-day was here, it went up on you. Now you come back to it, you're getting your bounce already. That's what I think they're doing. In the VIX, the trend is down. We have a pattern of lower highs, lower lows. If it continues down, I will look for the 2,400 level. Now, if you hit that number, I think the pros are going to write puts, trying to get back up to the 27.5 zone. They'll write the ones they think can do it. We'll see if I'm right or wrong on that. In the T-bond market, you are out of a trend. You now have a higher high, lower low. I pointed out during the past 2 weeks that this was a big resistance area. It came together with the Bollinger Band. You tried to get up today, you couldn't do anything, and you went right down to the lower band. That all happened as we heard news throughout the day that Mr. Mnuchin and Ms. Pelosi were getting closer on making a deal. When we get to the 10-year note, same thing, or is it? Nowhere near it. You had the higher high, lower low. Now, if we come back and we take a look at this market, today's high was 139.25.5. The Bollinger Band was 139.26. Yesterday you got up just to the within a point of the number. I think it's pretty close. I think you can see what I'm getting at. And now you've made a lower low, and tonight you're just sort of fighting right here. My point is, you hit your upper numbers. I don't know that there's any downside in these numbers. I have my own doubts that there is, but we'll see if I'm right or wrong. Why do I say that? Because the Fed's still there. And if that Fed is still there, where are you going? You're going to really raise rates that much? I don't think so. The D-Dollar Index failed where I thought it was going to, the 18-day average. It then lost its embedded reading. We talked about that. When you lose it, it's often a sign that unless you get it back the very next day, you're going to make a run, I think at least. That's what I teach. Doesn't mean I'm always right. To the 18-day average of closes, and that seems to be what this market is trying to do. Eurocurrency lost its bearish embedded reading. It's trying to make a run to its upper 18-day average of closes. It's still overall in the bear camp, though. You still have the lower highs, lower lows. This doesn't mean that you've changed the overall picture there. In the Japanese yen, this market's just hanging. It's decided to go to a coffee shop right here at this market and hang around there. That's what I think's going on. In Bitcoin, you've got lower highs, but I don't know where the right low is. I told you on this chart I'm confused because when you have an outside day and you take out that high, it changes where the swing line can be. It's something I've dealt with for many, many years since I developed it. And you want to know the beauty? I'm not married to any market. A chart to me is a chart. When I can't figure out where my numbers belong, I don't have to. I walk away. In Brent versus WTI, you can see you just continue to stay under this differential of the 18-day average of closes, which means what? It just means that the difference is that the WTI is a little bit stronger than the Brent. In the Brent itself, you're back into hanging here in a downtrend, not getting much momentum to the downside. Momentum here is flat. The bias is up since you're over the 18-day average with the swing line down. Don't see much there. You've got nothing going on in WTI. You've got a higher high, lower low pattern, flat momentum, bias to the upside. The market's trying to hang on here at the 100 and the 18-day average. What's weighing on this market are these COVID cases that are breaking out in Europe. And if they keep breaking out in the U.S., we have now 21 states in problems. If this thing picks up in the fall, the demand for oil, they're thinking, will fall. Think of the logic of it. Jet planes, nobody's going to really do much traveling. Cruise ships, nobody's going. Driving around, how much are you going to go in the winter? Where are you going? A lot of problems there for that demand. You get to gasoline, the market's fighting its battle at the 18-day average of closes in an overbought situation. Very, very rough market there. Nat gas went from upper Bollinger Band to lower Bollinger Band. I'm laughing with all the action that it did. Now, in the mornings, you know, what I try to do is start you off as I get my cup of coffee. And let me tell you, one of the markets that we've been having a ball with in the morning are trading these coffee markets. I've been putting out special updates for my client on it. It's probably the most I've traded coffee in the past week in terms of the recs that I'm putting out for my clientele. And wow. It's been working, so I'm happy, but it doesn't always go that way. I know you all know that. But I cover 40 charts at 5:40 in the morning. But it's more than charts. I give you the fundamentals. What's going on in Asia, what's going on in Europe, economic data that came out there, what's due to come out in the morning between now and, let's say, that 10 o'clock time frame. I cover all these markets in great detail, and I throw out trades. So if you're a trader and you're looking for ideas or somebody you need to bounce an idea on, this just might be the spot you want to go. I make this super inexpensive. I tie everything back to that coffee. And believe me, I've never been that much of a coffee person in terms of trade. I drink a lot of coffee all day long. It's my favorite drink. But when you look at what's going on here, for $7.95, the price of basically a Starbucks, 30 days worth of the data, come on. Is it going to break you? I doubt it. Is it going to help you? Well, I believe everyone I put out helps people. I'm going to put up the testimonials as people write me that are subscribers. I'm not putting up people that aren't subscribers. I'm going to show you what they say as they come in. There's, knock on wood, they've been good. You take a look yourself. And I lose subscribers. Yeah, they don't all just stay forever. Some stop trading futures, some go back to work, whatever. You'll read things that they can put out. How do you get this? And you'll see the testimonials before the end of the week. IraEpstein.com, under the word research, $7.95. Come on, pry. I'm Ira Epstein. You have a good one.